And now it's 6:34, time to check on your money. That's something that's on a lot of people's minds. So here's a look at Wall Street reacting to the new inflation report. Of course, markets just opened 4 minutes ago, so very, very early in trading, but it's up about 460 points right now, well into the green. This is a live look at the big board of the New York Stock Exchange. So we are starting off with some positive trends happening here. And as we mentioned at the top of the hour, the consumer prices increased 8.5% in July. That's compared to the same time last year, our consumer price index. And then that's still high, but if you'll notice right there, it's lower than the 4-decade high of 9.1%, which is the number we all saw in June. That was a pretty tough number to see and to live through, obviously, because that means our prices overall are very high.
There we go. A little bit of relief for people, and we're going to go beyond those numbers of the new inflation report. We're working for you to put those numbers into perspective when it comes to our finances.
So we have our financial coach, Michael Quan, joining us this morning. Good morning, Michael. Good to see you.
Good morning. Thanks.
So let's talk right about these numbers. 8.5% in the month of July. What does that indicate? Does that show you that we've already reached our peak, perhaps?
Yeah, so Wall Street's excited that it came out at 8.5. They were forecasting 8.7, but occasionally it could be a little bit higher, and so they don't like surprises. So Wall Street, now that it's lower, they're like, okay, now we can breathe a sign of relief. And so what that means is that going forward, this is an indication potentially that we've hit peak inflation, and that's a good thing. That means that the Fed's policy of raising rates is actually working.
And as far as how that's actually calculated, what kind of numbers go into the calculation? How should people feel just sitting at home, maybe not exactly knowing what this means, but clearly seeing the positive response on Wall Street?
Absolutely. So the main number that we're looking at is the CPI index, and that just stands for Consumer Price Index. And all that is it's a way for the Bureau of Labor and Statistics to calculate a person's basket of goods. So that could include gasoline, your car, rent, and general things that people are going to spend on it. So they want to see how much that's going up year over year. And so if you see that the number is coming down, then it's a good indication that the inflation's finally coming down. Okay,
and we know rates have gone up. Obviously, we had you on our show before to discuss that. But with rates going up, people may be frustrated. Hey, I can't get a loan. I can't afford that house that I wanted to buy. But the sign that we're now seeing with the consumer price index going down, I mean, does that mean it's kind of worth the rates going up? Is that kind of the goal here?
Yeah, it's a great question. The main thing is that as things go down, we're really looking towards the Fed and seeing what they're going to do in September. Are they going to raise the rates maybe 50 basis points or 75? And last time we had it at 75 basis points. And this time, it could potentially be lower. So the reason why that may be exciting for consumers is that that's going to put downward pressure on the higher interest rates. So that could translate into higher car loans or mortgage rates.
Does this translate to the Fed raising the interest rate, making the right decision in that sense? Would they take credit for this drop in inflation in the last year, or are there a lot of factors that then go into that?
There's a lot of different factors, but definitely their job is to really help to maintain inflation, try to keep it at a core level of 2%. Obviously, we're much higher now, and so they're really trying to push it down. At the same time, they don't want to go too far and push us into a recession.
Right. And as far as for people that right now who want to maybe get a car or buy a house, what is your advice to them? Do they need to hold off? I mean, what do you think all these numbers are meaning now?
Yeah, personally, I would still hold off. I think with a lot of the supply chain issues that we saw before, we're going to see an influx of inventory. So I still think there's going to be some great deals to come out. And if the rates still continue to come down, then potentially you're going to see some relief there as well.
And as far as the interest rates, though, you do expect them to raise those even more, even though we're seeing these lower inflation numbers.
They will still continue to raise them just because they need to get that core number. Even at 8.5, it's still very high. We're still going to feel that, but they want to get that further down. So we are going to see some rises definitely going into the future.
Okay. Still high, but better than we were a month ago.
Right.
Yes. Right. Michael Quan, thank you for being with us this morning. We appreciate the help.